traders, welcome to the TMT stock market strategy video for Tuesday, January 5th. Well, markets got walloped yesterday, and that's due to the China economic data that came out. Shanghai was down 7%. Horrible first day of the trading year. Also, the benchmarks took it on the chin. You could see that here on a 10-minute spider chart. And I got a lot of emails yesterday, and I just wanted to address a couple things. I said, Mark, what do you think about when you trade a day like this when you have a large gap down? Spider's down over $4. Me personally, there is absolutely no trade for me in here unless you're a scalper. I personally looking for high probability trades. I mean, you could have done this, all day, but this to me, there's absolutely no opportunity. When the moves happen here in the pre-market and you have a big gap here, to me, that's the most of the day is shot unless obviously you have a major turnaround. And here was just short covering rally, so really not much of anything to do yesterday. That's for me. I like to keep a position on and be a little bit more of a swing trader for the day. But here, no, risk reward is not worth it, guys. This is just not. You get a big gap down here, and then all of a sudden one small trade. If you get a quick trade here and a bounce back up just to sell off again, and for a quick short covering rally, I think it's something that you'd stay away. Remember, high probability trades don't have to be in it every single day to make money. You have a full month of trading to make money, so just keep that in mind. I hope that helps, by the way. All right, I want to go cover the indexes. I also want to cover the weekly charts on the indexes as well, kind of a top-down approach. I get really extensive in the premium video. Also, there's some key sectors that we're going to be watching. I also talk about that in the premium video as well. Take a test drive if you guys want. Really great information for a little bit of money. I do all the homework for you guys. All right. Anyway, listen. Let's get back to the charts. GLD. We did get a pop up on some of the fear that happened. This is what I'm looking for. You see, this is where I think that at one point in time the GLD and gold itself will rally. Will deteriorate below 100 and 1,000 in a GC contract. And then I think we can pick that up somewhere around 980, 990. And reason why we're going to have a decent sell-off this quarter is, and what I've been anticipating and still think so, GLD will start to rally again. But remember, that doesn't have to happen. We could really start selling off hard here, and then the GC contract just starts to break out of this base pattern here, okay? So we really want to keep an eye on things, and here's what I'm looking at, guys. I mean, really simple. I'm looking at a break below this, up or below this sideways consolidation here. If we break lower, I'm going to look for that 990, 980 print, and then look to start dabbling really ever so slightly, and then look to hopefully ride that up to the 200-day moving average. Or if we break out, then I'm looking for that back test and then a move higher, okay? So right now, to me, all of this stuff is all noise. I'm staying away from it, but I am watching it like a hawk. Same thing with gold, with crude oil, by the way. We do have some cold weather in the east, so crude oil is probably going to catch a little bit of a bid. Also, tensions with Iran and Saudi Arabia. That's going to just escalate and probably put a bid into crude oil too as well. I love to see that $32, $34 print. I'm going to do the same. Keep that in mind as well. I'll keep you guys posted. Spider's weekly chart, big long-term trend line support here since 2012. You could see that. We've never really breached it, and now we've taken that out in July. We try to rally back above it, but now we're below this here. So not a good sign. Again, you could see the RSI making lower lows and lower highs. You could see that here, and we have declining volume. So this is not a good sign for me. We've been mentioning that throughout the whole 2015, actually. Take a look at the daily chart. Now, I mentioned that we had possibly a bull flag here, right? You see the flag pattern. Or we had an M-top. I'm going to take this away. I don't think this is getting a little too long in the tooth for me to be a bull flag. So right now I'm gonna delete this flagpole, and this could be a downside, a downtrend channel, or we were talking about, remember these M formations that we've seen? This M formation actually did break out. Here's the neckline. We broke lower. So to me, I'm gonna take this as a breakdown of an M formation, but we did get, and let me just erase all of that stuff, we did get back again above this lower trend line area of support. And today is Tuesday, so turnaround Tuesday may be in effect today. And what I mean by that, saying, a lot of us from trading for many, many years, you get a lot of turn around Tuesday, walk away Monday at the end of the month. That's so true. But sometimes it doesn't have to happen, right? I mean, it does not have to happen. So what you want to do is you want to wait till market opens, see if we catch a little bit of a bid, and then start to rally. You get the next pullback, and you start look to buy that, thinking that we are oversold. I mean, we did really sell off pretty hard here, guys, yesterday, and I'm thinking that we kind of fill the gap. And that's what I mean by today is right about here. Maybe fill half of that gap or fill the gap and then start to sell back down again sometime towards the end of this week, okay, going into options expiration. Well, but, again, we just need to I wouldn't just be looking to just go ahead and do it. Let the price action dictate what's the next move. But, again, I'm looking to see if we fill the gap or close to it today. And then from there, we look for a reversal pattern, and then we start selling off again. And then once we get down to this level again, this lower trend line, then I do think we take that out, and then we challenge this area right here, okay? Take a look at now the weekly transports. I've had this on for quite some time, and I've showed this to the premium video subscribers, but I wanted to get this out to you and let you know that we did break this head and shoulders pattern. And here's another thing, too. Here's the neckline. Here's the head and the neckline. This is what it actually measures down to, guys. I mean, this is a huge decline. You're talking 108, let's say 108 and a quarter. That's a big, big move lower. I mean, you're talking a long. Now, it doesn't not going to just go straight down, obviously, but you could see here from 2015 of last year of February, we've actually just kind of dwindled down all the way down, try to bounce and fail. So this head and shoulders pattern is valid. It did break. We did get a little bit. Let me just open that up a little bit. We get a little bit of a back test here. You could see that little bear flag, that tiny bear flag into that resistance, and now we failed again. So to me, I think that looking for lower prices, this will definitely help U.S. equities to start to sell off. Now, remember, guys, it doesn't have to get there, but that's just where the pattern measures. So not looking too pretty for the markets. Here's a daily chart of that, and here's that August low where I mentioned if we do take out this bear flag, we should tag the low end here, and then next target would be the August lows, which right now we did hit. So we'll see if we fill the gaps. All right, so we got gaps that need to be filled. Doesn't have to happen today, but we also have turnaround Tuesday, so it's a possibility that we might run higher again. So I will wait in the morning, let all of this selling get out of the way the first 15 minutes, and then let's see if the market stabilizes. If the market does stabilize, then it's going to be your cue to start looking to buy pullbacks. Same thing with the weekly IWM. You can see that here. We got a little bit of a bear flag pattern. Here's that neckline. It did not trigger yet, so we're waiting for that trigger. We just got there yesterday. We hit it right to the penny. Let's see if we fill that gap again. Once we fill this gap area and we start to head lower, we should take out the lower neckline and the 200, and then again we'll give you some measurements to the downside. IWM daily, again, guys, really an ugly looking chart. Here's that M formation that we said that I mentioned last month. You could see that right here. I drew that, and here's that neckline. Broke that neckline area, and we're going to be tagging this area here. Looks like that's going to be the spot. Remember, there's that gap area that we're going to look to fill, hopefully the next couple of days, and then we resume lower. Okay, diamonds, same thing. You could see here, caught that lower trend line area. And again, guys, you could see that M formation. I do think that that this here is not the bear flag that we're looking for. It's getting a little bit long in the tooth, but we'll see. Let's just see what happens. I'll leave that out there, and then we'll decide in the coming days. We'll let the market decide. And lastly is the Qs. Big point. We had Amazon, Google, Facebook, Twitter, all of the technology stocks, Apple, Priceline, all getting clobbered. They were the leaders. Now we're the laggards. Be very, very careful out there. Don't be looking to pick a bottom, guys. Risk happens very, very quickly. Hope it helps. We'll see you tomorrow. Take care.